evening. I'm Frank Congilose. I'm the managing partner here at CNA Financial Group. It's my pleasure to be with you this evening as we're speaking about our Wisdom Wednesday, which is Disability Income Awareness Month. I'm happy to have with us one of our longtime executive vice presidents, one of my friends, and you've been with me over almost 40 years
over
now.
40 years.
I had hair when he started. But
true.
I'm happy to introduce Rich Pasick, CFP, CLU, CHFC, and really just our in-house disability income specialist. So Rich, it's so nice to have you with us to speak on Disability Awareness Month. And so Rich, you know, it's interesting is when we think in terms of disability insurance and things of that nature, I think that the magnitude of what we think about and the things that we speak about are not often realized. You know, the reality is, if we think of it, of all the assets that we can acquire over our lifetime, okay, and think about everything, there was one common element that was really key to making sure all of this happened, which was our ability to work and to earn our income. So, you know, when you think of it, you know, someone with, let's say a career of 40 years, and if let's say their income was $100,000, you're talking about $4 million going through somebody's hands. And by the way, that was without
Plus
ever getting,
inflation.
I was going to say, without a pay increase, without holding on to, you know, anything else that they had going on. And so the reality is, you're talking about someone's income being worth millions over their lifetime. And yet, in the event they get sick or hurt, if they should stop that, the reality is that that ends the game. You know, it's like game over, you know, what do we do?
That's true. Yes.
So one of the other things that I like to bring up before I'm going to ask you to speak on this a little bit is, you know, for, you know, most people, they talk about an average savings rate historically has been about 5% or less. And, you know, and sometimes they go higher, certain times they're lower. But the reality is they talk about, hey, if you're a great saver and if you save for 10 years, you would have effectively accumulated a year's worth of income when you think about it. And with that being said, in the event of a disability or somebody getting sick or hurt, if that gets extended, that could be a problem on all that savings that you've accrued.
It's true.
So having said that, Rich, I know that you being an expert, what are the probabilities of that actually happening, of somebody getting sick or hurt or somebody having a disability or whatever? Because we think in terms of, yeah, it's not going to happen to me, it's not, you know, and so forth. What are your thoughts? What do you see?
Well, just to, you know, I refer to a webpage called disabilityawareness.com. And what it's put out by the Council for Disability Awareness, and what they put statistics out of the chances of becoming disabled for a long time. And the fact is 1 in 4 20-year-olds, 25% basically, will become disabled one time or another throughout their career before they become age 65. And that disability will last 1 year at least. And a disability that lasts 5 years, there's about a 15% chance. So it's a high chance of somebody becoming disabled.
So, you know, and that's why I brought up that one statistic, which was, and not even a statistic, but the reality is that if you think in terms of somebody putting away 10% of their income, basically a year's worth of income.
And it's gone. Yeah, you're right.
Could, you know, where 10 years of savings would be lost in the loss of 1 year of income. So,
risk,
when you think of that, we then start to think in terms of, and the yeah buts typically are, well, can I get like, you know, what if, you know, what about workers' comp? You know,
or the government will take care of me.
Well, nowadays, you know, we'd be a little skeptical on that one, you know, because we're hearing of all the, you know, the issues with regard to, you know, states and the federal government with regard to debt and deficits and things of that nature. But there are programs out there that do pay and they do take care of people when they are disabled. However, they're pretty limiting, I think, when you think about it. So why don't we address the first one that comes to people's minds? Because we're talking about, you know, them getting sick or hurt, not working. So a lot of people think in terms of, you know, well, what about workers' comp? You know, what are the pros and cons to workers' comp? And, you know, what are your thoughts on that, Rich?
Well, obviously, workman's comp is an insurance program that employers pay for, that if you become disabled or sick or hurt on the job, work related, you'll get some of your salary continued or possibly some kind of a settlement. But most people refer to, that's not usually a big part of a disability claim. It's usually people look at the Social Security part. Now, Social Security does have a maximum benefit. It's rather sizable, $4,022 per month now. If somebody became disabled, that's full benefits. That's the maximum they can collect. Many people will collect less. The problem is the 6-month waiting period, meaning no benefits paid until at least 6 months. And then it will pay, it's scheduled to pay all the way until age 65. Then it'll click on to retirement benefits. But the problem is the definition is very difficult to be able to claim. About 50% of claimants are declined the first time. So you have to hire an attorney. You may have heard of people doing that. And ultimately, only about 70% are approved after going through the program to get resubmitting an application.
So, Rich, what I'm hearing from you is, first, perspective that I have, and first takeaway is, you can't really count on workers' comp. And when I say workers' comp, it's like sick
not
or
designed to
injury.
pay an income, your income for a lifetime.
And the reality is it's something that occurred at work. So you don't know you don't know what the event's going to be. So that really doesn't protect you.
Yeah.
Then the second side of that is, you can think in terms of Social Security, but there's an elimination period. It's a very restricted definition, and it is a very limited benefit. But then the third one, maybe to just touch on is, people think in terms of, well, we live in New Jersey, so New Jersey got state disability.
They do.
Maybe take a moment and share, what state disability might look like, and what your thoughts are on that.
State disability, New Jersey state, and several states have it. New York has it as well. They have a limited benefit that will pay into, this is the maximum benefit you're able to collect now, $1,025 per week. After a 7-day elimination period, 1 week elimination period, they'll pay up to 6 months. That's the maximum. So about $26,000. Not incredibly large, but it's decently and it's a little easier to collect than Social Security.
So let's look at this, another perspective. And the reason why we share this with all of you that are watching is, if you can't tell, we're passionate about this because we really do believe that your best asset is your ability to work and to earn. And it's really going to determine whether or not you're going to be financially successful over your lifetime, because that loss of income, again, can, cost you millions, okay, depending upon how long you're out, or it could cost you significant savings. And what we also say is that opportunity cost on the savings of what you've accumulated thus far to support yourself if that happens. And by the way, all of that was the assumption that you've been saving up till now, and you've got reserves that are going to make up the difference.
You're hoping to, that's right.
And so it really does become somewhat challenging. The reality is, and I remember, my dad years ago getting sick, and it was prior to him retiring, and costs go up, not down, when you're sick and hurt, because you've got deductibles on insurances, you got co-payments,
just to care if you had somebody to come in to take care of your house or yourself.
So
very expensive.
And so it becomes a bit of a challenge when you think of it that way. So Rich, one of the things that I'd like to maybe spend a little bit of time on is, there are companies, and we recommend this for all of you that are watching this, there are companies where you work that offer group disability benefits. And so maybe we can address that, first of all, not every company does. I'm doing this over 40 some odd years. And what I would tell you is that my experience over the years is that many of the clients that I work with, many of the clients that, our firm represents, have not had group disability benefits from their employers. So they had to figure out what to do on their own. But if they are lucky enough to get something from their company, does that solve all of the issue?
Wish it did. But let's start by how many companies are really offering disability. Not many. There are 51 million Americans, working Americans, that do not have any sort of disability coverage outside of state disability or Social Security. So companies offering it, it's usually the larger companies only. So these small mom-and-pop shops, not really. Small professionals, not really. So the group disability typically is employer paid. So when it's employer paid, it has a strict definition because they're shopping price. To keep that in mind. And the benefits will be taxable. They probably will be reduced if this person collects state or Social Security disability. That's an issue. The definitions are a little bit stricter, not quite as strict as Social Security, but pretty strict to be able to collect a lucrative benefit.
And again, Rich, and when you're going through it, so let's say that they had 50% or 60% of their
Mhm.
compensation is going to be paid. Any of those group benefits, again, typically offset
They
from
will
state
offset
disability,
dollar for
offset
dollar. That's right.
from, Social
Yeah.
Security if you're eligible for that, workers' comp, any of those things typically are offsets. However, if somebody had an individual plan, which we'll address in just a little bit, those individual plans oftentimes do not offset with any of that.
That's correct. Let's talk more about the group. So a group plan will be offset. That's correct. The issue is that when they're offset, they're going to collect a less benefit, and it's also restricted on if they do partial work. That's the issue, the partial disability. Many people are not totally disabled, completely on a bed with wires and every bone in their body broken. Most people are having some sort of residual disability or partial disability, where they're getting a little worse after a sickness or getting a little better after a recovery of an injury. And that's really where we see most of the claims. And the group disability is pretty restrictive when it comes to that.
So Rich, when you mention that and people think in terms of, what are some of the leading claims that people are seeing? Is it, is it cancer? Is it heart? Because people think and they go, hey, I'm healthy. I go to the
Yeah.
gym. And so forth.
People, especially younger people, think that, well, if I get disabled, it's going to be caused by an accident. And the fact is, about 9% of disability claims are resulting from accident, injury, or an accident, where the other, 91% are caused by some sort of sickness, musculoskeletal, heart, cancer, and so on. Musculoskeletal alone is 28%, cancer 15%, heart disease 10%, mental illness 12%. We see a lot of that as far as claims. So most claims are not injury related, where most people think it is.
Got it. So let's, one other, thing that I think in terms of, when I speak on disability insurance and coverage like that, Rich, if someone were to look at what they've got available, which is really what the whole purpose of us spending time with you this evening sharing this is for you to do a self-assessment. And by the way, if you need help with your self-assessment, I would recommend a CNA financial advisor speak to you naturally, little, plug for the firm. But what I would say to you is that you should really get an assessment done of what do you have. And the reason why you want to find out what you have, it's like any other insurance. Wouldn't you rather know what your coverage is before you need it?
Hmm.
It's kind of like, years ago, Rich and I have lived here and, down the Jersey Shore, and we remember Hurricane Sandy.
Oh, yeah.
And, I had people that were calling and, saying, hey, Frank, do you do anything on property and casualty insurance? I said, don't follow it. I live on the water. And one of the things I wondered is how am I covered for, in the event of a storm like this? And it's like, that's not the time to be wondering how my coverage works.
Exactly.
And I did it. I was guilty of that. So the whole point of that is once you go to a doctor and you find out you got an issue, or once you got hurt at work, that's not the time that you should be doing the research to find out how your checks are going to come in. You should find out today before it happens.
Yeah. Case in point, I do a lot of assessments, financial assessments during a questionnaire, and I ask many folks, what sort of disability coverage you have, what happens if you get disabled, and so on. And most people do not have an answer to that. They really don't. They say, well, how does my group work? Do I have group? How much does it cost? And many people are surprised to find out they may have a high salary, say $200,000-$300,000, and their group may be limited to $5,000. That's not getting them, it's not paying their bills, that's for sure. And with that particular person, we would supplement their group with personally owned disability insurance. That's the key.
So since you said the magic word, which is personally owned disability insurances, what are some of the things that somebody can do with regard to looking into individual coverage for themselves to supplement, whether it be supplementing state disability, supplementing Social Security, supplementing their group benefits, or just, when they look and they go, hey, you know what, I don't even know what I have. I don't think I've got anything, but you do have state disability, you got Social Security. What are things that people can do, Rich, and what are some of the things they should look for in coverage? And let's start with, I always say is, I think definition is really key. And the reason why I say definition is key is, it's like anything else is, at the time of the claim, I don't want to look and say, oh, this didn't happen on a Thursday at 3 o'clock.
Yeah,
So
exactly.
they're not going to pay. So what should they look for in a definition, even at work, by
Yeah.
the way?
We want a person to be insured for their occupation, meaning some people have occupations that they're sitting doing desk work. It's a little easier to define what they do, but there's a lot of dexterity in some particular industries. For example, surgeons, they do a lot of eyesight and dexterity. They lose that ability, but everything else is fine. They can't do their work. And we'll personal plan that covers their specific disability for their occupation will pay benefits. Where Social Security won't, that's for sure. Group probably won't.
So when I hear you speak on occupation, the things that you would want to look at, even in your group coverages, do you have what is referred to as own occ or your occupation, meaning that if you can't do what you're normally doing, okay, that would be good coverage. Any occupation, okay, because I've seen some coverages that say any occ, and maybe Rich, take a
That's
minute
true,
and
yeah.
discuss the any occ definition.
Yeah. But there's three definitions of disability. One is your specific occupation. You cannot do your specific occupation, but could do another occupation and don't want to. The insurance company will consider you disabled and pay full benefits because you can't do the cutting or whatever you do. Eyesight, speech is an issue for, let's say, attorneys or whatever. Many professionals need that. They lose that ability. They're going to be considered disabled, even though they can do something else. Any occupation means, well, you can't do your occupation. I can't do my cutting or speech or whatever, but I could do something else. I don't want to. They're not paying because I could do something else. That's where we want our personal disability. It has to fill those gaps. That's very important. Otherwise, we're at least 70%, no more than 70% approval rate for Social Security. If we had just any occ, that's what Social Security has.
Great
That's why
insight.
most people are declined.
So then I would say, so if we go from the definition, then we would talk about what I'll call the deductible, which is how long should someone wait before they, have coverage kicking in? And I know that costs are always an issue. Okay. And I always say is if you work with a good financial advisor, I would, not a little plug here and there, got to do that once in a while. But if you work with a good advisor and so forth, the whole idea of cost is to figure out how do you make it affordable so that it's not hitting the budget too hard? And so where should people look with regard to the deductible, or we call it the elimination period, which is before the first check starts coming in or before you start accruing benefits? And so what are you seeing in the marketplace, Rich?
Typically 90 days. Most group plans are about the same. Their long-term disability has a 90-day waiting period, meaning they're looking at Social Security or state disability supplementing some part of that. And then after 90 days, nobody gets a check until 4 months later, 120 days. They don't get it in the beginning of the 90 days. That's when you're eligible to start receiving benefits. And they'll pay, and that's your elimination period, sort of like a deductible when it comes to auto or homeowner insurance. And the benefit period, we want to go at least until age 65. We don't want to see a short, 2 or 5 year benefit period. That's really crucial.
Now, having said that, though, Rich, is not all occupations can get that age 65 benefit, because there are some people, it's like, whether they be an electrician or a plumber, and people that, are out there and they're doing a lot of manual labor. Some of those careers have more limiting benefits.
Yeah, maybe a 5 year benefit period in many cases. Yeah.
So I always kid with people, and, I always look and I go, so I'd rather have protected myself for the big claim and absorb the smaller claim. And what I mean by that is that in whatever your occupation is, you can cover yourself 30 days, 60 days, 90 days. You could probably figure that out, or even 120 days, in order to get the longer benefit that if you were out for an extended period of time.
That's correct. Yes, that's right. Exactly. Your group may be 5 year benefit period as well. You may be limited at $5,000 or $7,000. It may be total only. That's why we need to look at what your group is. And most small companies don't even offer group benefits.
It's a great insight.
Yeah.
So, as we're, kind of wrapping up, Rich, any other comments that you'd like to add in on some of the things that we're speaking on as it relates to, in the event you get sick or hurt, we call it disability, and it is, again, Disability Insurance Awareness Month, which is making all of you aware that your most valuable asset outside of your health and your family, et cetera, is your earnings and your ability to work and your ability to earn. It's like, Rich, any other, you know, insights that you'd
Well,
like to share?
May is Disability Awareness Month. April is tax month. And a good site, and I don't think I hit home enough, private disability coverage almost always, if set up properly, will be 100% tax-free, paid in addition to anything else a person can collect, like their group, Social Security, state disability. The tax-free is really huge because pretty much every other benefit is going to be taxed to some degree.
So Rich, when you say that, it's a very interesting perspective that I want to make sure that we're clear with all of our viewers and all of our, you know, CNA community, which is most of the time, okay, and I'm going to tell you 99% of the time, someone is not typically going out with the current level of income that they have today. Nobody pays 100% benefit.
That's for
So
sure. Yeah.
what's always happening, if you really understand what's occurring, is that in the event somebody gets sick or hurt, there's going to be a loss of cash flow. Cash flow is going to be reduced or eliminated at some point. And so to not really assess and understand how that works would be like really a mistake on your behalf. You should really know that, because even a great disability plan that pays 60% or 70%, which is typically the maximum that someone can get. And so we should probably, you know, bring that up, which is, Rich, how much can somebody get?
Typically about 60%. They don't want to make it too easy if you become disabled and stay disabled. That's what insurance companies look at. So they limit it to make it a little stressful and tight, but certainly to help you out to pay, you know, your expenses, and you should live comfortably.
Yeah, because they don't want it to be the, hey, this is like being retired. This works out perfect. And, you know, and then there's no motivation for you to go back to work. So there's going to be a reduction to make it, you know, a little bit uncomfortable.
Yeah.
And so that's why we bring this up, which is to say, this is really one of the most important and impactful, you know, things that can happen. And then, you know, I always say the greatest risk to you when you look at any of the things that we speak about, with whether it's protecting your income, protecting your life, protecting your assets, I always say the number one risk, it's called hubris, which is excessive pride. It's the belief that it's not going to be me. It's going to be somebody else.
Yeah, I go to the gym every day, right?
And the reality is, you know, hey, we're not all going to be here forever. You know, that's a reality. Okay. And what happens is, it's like having a car. You know, it's like at some point, the car's not going to be running anymore. But the amount of maintenance and servicing issues and all the other things that may have to go along the way, we're not going to know that until it happens. And we don't know when and if it's going to happen. But you got to plan for it.
That's right. Yeah.
Any other insights on your side,
I
Rich?
think that's it. Yeah.
Very good. So for all of you that have been with us, it's really always a pleasure to be spending time with you. Enjoy the evening, and we look forward to catching up with you soon.